The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. My name is Jason Collins, and I'm with URL Insurance Group. I'm an agent support specialist here at URL, specializing in single premium life products. First off, I'd like to thank everyone for taking out of the time out of your busy schedule to be with us today. Now, those of you that are currently doing business with URL, I'd like to personally thank you. We understand that you have many options as to where you place your business. That's why we appreciate you working with URL, and we promise to continue our dedication to your success. Some of you are new to the URL family. Welcome. URL is a full-service national broker. We provide agents complete support in all of our lines. URL provides single premium life, fixed and indexed annuities, traditional life products, as well as individual and group health products. We also have a senior division that offers MedSup and MedAdvantage products. So please take a moment after the webinar to tour our website at www.urlinsgroup.com and discover if there are any additional avenues for URL to assist with your success. Again, that website is www.urlinsgroup.com. I'm extremely excited to be part of presenting this great program for you today. Single premium life has been growing in popularity the past few years. People, and more specifically baby boomers, are realizing that they have cash value in old whole life policies that they don't want to continue to pay into, have money that is set aside and earmarked for the next generation, making little or no interest in CDs and savings accounts, or have real concerns about their future with regards to long-term care should they need it. Today we're going to discuss a product that will help your clients with these concerns. I'm proud to introduce Steve Zimmerman. Steve is the Sales Vice President for North American Life Insurance. He's here to introduce North American's Legacy Optimizer, Single Premium Life, and how it will benefit your clients. Now, before I turn it over to Steve, I'd like to mention, should you have any questions during the podcast, there is a question box on the right side of your screen that you can type them in, and we'll answer at the end of the program. So without further ado, I'd like to turn the program over to Steve.
Hey, thanks, Jason. Thanks very much. And thank you, everybody, for joining us today. It is a great opportunity for us. We're thrilled to be here with you. We thank you for spending a little bit of your valuable day with us. I have on the line with me Kim Grund. Kim and I are your dedicated field resources that work in conjunction with URL. And we are here to share a little bit with you about an exciting new product and process opportunity. So what I would suggest as we go through this, be thinking about the client profiles we're discussing, because what we have today will go significantly beyond a product and a possible new sales opportunity, but really we've got a way for you to revisit client relationships, to think about new prospecting opportunities and ways to go deeper with the clients and prospects you have. So we're going to dig into this right now. Legacy Optimizer is a solution geared towards, I would say, probably your mature or your retired clients as a legacy enhancement tool, but a way also for you to be able to manage taking care of your family. So we'll dig into that in a little bit of detail. Okay, first things first, I'm really going to skip the company commercial a little bit. That's really not why you're here, but just to give you a little bit of comfort with everything going on with the life insurance business these days. North American is a company you really can trust and just count on us to be there. We are in the top 10 for all companies writing business. If you take out the big career shops writing business, we're in the top 5. And we actually are owned by one of the largest private companies in the world. So you can count on us to do the right things and not just be doing short-term things to please the Wall Street analysts. So enough of the commercial. Let's talk about Legacy Optimizer, but let's start with talking about clients, the profile we might be looking for in your book and in your prospecting, and then the need they might face. So what we're looking for here is a client age 50 to 80. And I'd probably think we're probably looking for somebody that's 60 plus. We're probably thinking this is a retired client situation. We are looking at the idle or underutilized legacy assets. And this is a situation where we've got clients that might be interested in doing something for their kids. You know, how can I do something for my grandkids, my kids? I'd like to leave them something. But you know, these days, after the 2008 market correction, those memories are very vivid. Even though the market's at all-time highs, people are kind of concerned about, still having enough money. So what we've got here is we've got a situation where if you think about the clients, they're on their mind is, I'd like to do something for my kids, but only if I'm okay. So we want to make sure we have access and control to these dollars while I'm living. And if I don't need them, then my children can have them. So it's kind of like having your cake and eat it too. So our profile here is going to be 50 to 80. They have sufficient assets for in retirement, and they might have an idle asset, bank CD, a bond, or something that they don't really need today, and they want to pass those dollars along to their kids. Now, we had sent out this sheet before the call. If you have this, we wanted you to take a minute as we're going through this material. You see there, we've got a spot to write down 5 client names. There's our profile. So if you received an email from URL earlier today, this is what it is. I'd say grab that sheet and open it up. If you don't have this sheet, we can send it to you, and also just jot down names as we go. So the end goal of this call is for you to have 5 or so names, more is great, names, age, approximate dollars of idle assets, and then get it over to Jason at URL. They'd be happy to run some quotes for you. Just it'll give you an idea of how the product works, and if you like them, we can help you present them to the client. So age 80 or 50 to 80, idle assets you don't need, that asset amount between 25 and 200,000, and looking to kind of have the best of both worlds of leveraging that asset, but kind of keeping control if you need it. So let's now look at the client demographic. This is some information we see all the time. There is just enormous client dollars out there, $30 trillion that are owned by, being held by baby boomers. We've got an enormous asset transfer to the Gen X and millennial generation. And now we're going to talk about maybe a better way to look at that planning. So the conversation you might have with clients and prospects is, have you thought about your legacy? Have you updated your will lately? Have you made, preparations for a secure retirement? Have you thought about long-term care? And we're going to walk you through how all those questions fit into this conversation. So if we take a look at, clients today, here's the main, or some of the main concerns they have. Emergency funds. I think I'm in a good shape right now. I've got my pension. I've got my 401k. What if something happens? What if the water heater breaks? What if the heating system breaks? What if something happens to my car? I need to have a source of emergency liquidity. What about long-term care is the next one? Long-term care, the statistics. It's, 50, 60, 70% chance that someone in their 60s is going to need long-term care. If you take a couple, that number goes up dramatically. So long-term care. What have you done to solve your long-term care problems, and is this something that you're concerned about? We can arm you with the tools to ask that question with confidence. These products, as many of you probably see, using chronic illness and long-term care riders on life insurance is becoming a really, really popular way to address the long-term care problem. And then efficient transfer to heirs, that's kind of the core of this, but we want to do that only after we're confident that our needs will be met. Now let's take a look now. We'll go a little further looking at this client profile. I think clients are going to have different kinds of money. I mean, you may think of asset allocation or things like that. We're really not looking at asset allocation here, but this is, I would say, different types of money. You might have heard of there's now money, there's later money, and there's never money. The now money is the money you use right now to pay your bills. It's what you use to pay the cable bill. It's what you use for the pizza out on Friday night. Your later money could be that investment account that you don't use today, but you might use in 5 or 10 years in retirement. And your never money is maybe that bank CD you have. You're not going to touch it. You don't really need it. It's earmarked for the kids, but it just makes you feel good knowing it's there. It's that never money, those assets that we're looking at today. And I would say never money now after 2008 in a lot of cases is maybe never money. So what I mean there is, I'm never going to need the money. Now people think, hey, maybe I'm never going to need the money, but I'm not really comfortable giving it up. So we've got a good solution that lets you, again, have your cake and eat it too. Do something for the kids, but retain access and control. So if we look at client objectives, let's move forward a little bit now. We're going to continue to develop the profile of clients. Their objectives are doing something for the beneficiaries and access to the funds if I need it. What's on the mind of clients these days in retirement or going into retirement? Low interest rates, taxes and inflation, and always that risk aversion. It's not so much, maximizing your gains. It's also not losing your money too, and that's on the mind of people. So we're going to look through each of these. If we look at this bucket, let's just assume this bucket is our legacy bucket. These are some dollars we want to leave to our kids. Maybe it's that CD in the bank, or it's a bond we have in our investment account, or maybe it's even, you worked for a company for a lot of years and you've got a position of that stock of the company you worked in. In any case, it's those legacy dollars you're setting aside for the kids. But in this case, let's go back to a CD. It's a low yielding position. This slide says 0.5 or a half to 2%. I think if you're getting a 0.5% to 1% on a CD right now, you're doing awesome. So why don't we just say you're going to earn your interest on the CD. Then what's going to happen? You're going to pay taxes, 20 to 30%. Let's just call it 25 average. But then inflation is the silent killer. Inflation is really not something that's on people's mind as much as loss of risk of principal, market volatility, interest or taxes. But inflation, in terms of eroding your real purchasing power, can be a huge problem. So let's take a look here and let's walk you through an example. Say we keep consistent with our example of a $100,000 CD. Say we're making 1%. Let's make the numbers easy to work with. You have a $100,000 CD for 1 year. At the end of a year, you've earned $1,000. Assuming a 25% tax bracket, you're going to pay back $250. So net after taxes, end of year one, $100,750. But then the inflation, that silent killer, the loss of purchasing power at 3.22%, that's the average inflation rate over the last several years, your real purchasing power after a year is just over $97,000. If you trend this out for 10 years, real purchasing power of a CD in the bank, 1%, 25% bracket with 3.2% inflation is $77,000. So if you look at this a different way, your kids and grandkids aren't going to be able to use the money to the same benefit you had today. If you want to leave them the amount that will give them $100,000 purchasing power later on, you're going to have to gift them or transfer significantly more dollars. So now let's take a look at the solution. Legacy Optimizer is a single premium, simplified issue product. So there's two main issues that we're going to deal with today. The two things we're really excited about are the simplified product and the simplified process for underwriting. So let me just build this out real quick for you. Before I get into this, I just want to pause for a second with Kim and Jason on the call. They're also a wealth of information. Kim, before I get much into, getting through some of the specifics on, how the product works, do you have anything you'd like to add?
We're just so excited because this is a new product for North American. It's our first new product in over 10 years, and it's simplified issue. And like I said, Steve will probably get into more of those details in a little bit, but it's a real simple process for the agent. There's no parameds, there's no labs. So it's really a simple solution for the agent.
Okay. Great, thank you. Hey, Jason, I know you're probably being very nice just to let me run over here, but do you have any comments? Would you like to add anything?
I am just super excited to continue on. I can't wait to see how this story ends.
All right, awesome. Hey, well, thank you. Well, then we'll keep it going. We'll pay attention to everybody's time, and we'll keep going. So, folks, we're looking at the Legacy Optimizer. It's a simplified way for you to help your clients manage those legacy assets, but keep control of them for their own benefit should they need them. Single premium product. It's based on an IUL chassis. However, it provides you with guaranteed death benefit out to age 120. We also have cash value growth potential where the money will be potentially earning returns in an index and you've got downside protection. So while clients aren't going to buy this for an inflation hedge, they're primarily buying it for life insurance and death benefit. It is also a way to earn some extra returns as that inflation hedge, as that supplemental place to save some money. And then we're going to look at liquidity features, because really I think that's part of it. If I know I can have access to my money and I know it can do things for me while I'm alive, then I feel really good about maybe putting it in a position to leverage it for my kids. So death benefit. It's an immediate tax-free leverage in the death benefit, and that's where, you folks on this call probably know that. We've got efficiency because it's an immediate step up. It's a tax-free death benefit. The other thing we're doing is we're running this as a minimum face. It's a modified endowment or MEC contract, so we're going to run it with a minimum MEC face. So when it says room to grow, what we have here is as the money in the index grows and becomes bigger over time, then it will force the corridor and the death benefit up. So you'll always have the minimum guaranteed death benefit to 120 when you buy the policy, but when the index grows, it will also push your death benefit up on a non-guaranteed basis, which will usually happen. Hey, the cash value growth potential. We have two versions of the S&P 500. So we can keep it simple. If anybody on the call has an interest to dig into two of those, we have two versions of it that offer a very strong combination, but it's beyond what we want to cover here today. We have a guaranteed premium bonus of 10% that's paid 5% a year starting in year 5 through 9. Now let's take a look at the liquidity features. This is also something I think that's really significant. There is a 10% per year amount that you can take out without incurring a surrender penalty in the first 5 years. So if you need some money in the first 5 years, 10% free of surrender penalty. There's also a guaranteed return of premium in day 1 of year 5. So if you can wait 5 years, you can get your money back every single penny. We also have an accelerated death benefit, which this really will be one of the primary areas that I think clients are going to like this, because this is where the chronic illness liquidity comes into play. It's not long-term care insurance, but it does address the kinds of needs that many people regard as long-term care needs. So the key here is the benefit triggers. How does this thing work? How does the money come out? Why is this going to be a good solution for clients? The benefit triggers are the standard 2 of 6 activities of daily living, that you can't do that without assistance, or cognitive impairment. Now, the nice thing that we've done here is in filing this product, we have filed it and removed the permanent part of the cognitive language. And you've probably seen when you looked at other products, many riders have in their chronic liquidity definition, it has to be a permanent situation. Here with Legacy Optimizer, we've taken permanent out of the chronic definition. So it's 2 of 6 ADLs, cognitive impairment does not have to be a permanent situation. Then what we're going to do is we're going to advance as much as 24% of the death benefit or as little as 5, and we're going to discount that slightly. And we have a table we can provide you so you know the exact dollars. So there's not a cost for it on the front end. When you discount the death benefit, there's a slight, when you accelerate some of the death benefit, there's a small discounting. That's the deferred cost. We're going to accelerate that money to the client. The exciting thing is it is an indemnity type plan. There's no receipts needed. There's no plan of care needed. So we're going to send that check to the policy owner. They can do with it what they want. So we've got a great solution here as part of your long-term care plan. Okay, let's take a look at a specific example. And let me walk you through how we might talk to a client or we might present this. So if we have a 70-year-old female, let's assume she's got a net worth of $475,000. $300,000 in her kind of everyday retirement funds. She's got $175,000 in her discretionary funds, or part of that maybe her never assets. What we're going to do, and this is how we're looking to quantify the value for you of, is this policy really any good? So let's take a look here. Let's say a 70-year-old female, $100,000 that she's got on the side, either in a bond or an annuity, in a CD. Let's just compare leaving the $100,000 in a 1% taxable vehicle, maybe a CD. Let's assume the second row is a 2% deferred, maybe a fixed deferred annuity. And let's assume we put $100,000 into Legacy Optimizer. So guarantees to the beneficiaries in year 10, you see that we really don't have a long-term guaranteed in the 1% taxable, 2% deferred. We could probably show you some non-guaranteed returns, but in looking here just in pure terms of guaranteed future values, you're guaranteed to have your principal in the first two. In Legacy Optimizer, you'll be guaranteed a leveraged death benefit for the beneficiaries of $165,000, and that's a 5.1% internal rate of return. So for transfer to the kids, we've got a much bigger number to the kids and grandkids. If we look here and then we take an assumption of, let's go out 10 years and let's look at our non-guaranteed numbers. The 1% taxable is going to grow to 107, the 2% tax deferred is going to grow to 121, and then the Legacy Optimizer is going to grow to a little over 175,000. You see here internal rate of return 5.78. So on the death benefit side, you'll never get less than the guarantee, but most likely you'll probably get some upside potential because of the index participation. For chronic illness, if you have money sitting in, and I'll go back to a CD because it's easy for us to envision, if you've got $100,000 in a CD and you want to liquidate it over 4 years, it's simple math. You're going to pull out $25,000 a year. That's the amount you've got in your hands to pay for chronic illness or long-term care types of needs. When you're accelerating the Legacy Optimizer's benefit, you're actually taking the death benefit and you're accelerating that amount. And that's why you see here we've got a larger amount that we can accelerate for your own benefits while you're alive should you have some kind of a chronic situation. And we see here in the green, on the non-guaranteed side, we just see the projected out future values of the taxable and tax deferred account, 26,028, just because we're doing that future value divided by 4. And then we also see with the Legacy Optimizer, we've got some upside on the death benefit, and we're accelerating that out, and we're still having more dollars. So for death benefit passing to the kids, you're going to have more money than just leaving the money sitting idle. For long-term care or chronic illness liquidity, you're going to have more dollars. If you can wait 5 years, you have guaranteed return of premium, so you have access to all of your money, and you have more leverage benefit if you're living for long-term care, and if you die, when your kids get it. So if we look at what we've accomplished, we've taken a $475,000 net worth, and we've grown it to $540, enhanced benefit for the kids, enhanced long-term care liquidity, full access to the cash for the client. So I'll pause again. Kim, let me just, I've been going, so have I missed anything, or would you like to comment?
You're doing a great job, Steve. You did mention with accelerated death benefit what kind of payment they might expect to receive. And I thought I could just add to that, at ages 50 to 64, that benefit payment percentage would be 60%. 65 to 79, it'd be 80%. And 80 plus, it would be 85%.
Great. Hey, thank you very much. That's very important. All right, guys. Let's keep moving. The simple process, I think, is as exciting as what the value proposition is, for what the product will deliver. So let's take a look here at the process. And again, we're going back, and I'll remind you of that sheet, and just keeping some notes. Who do you know right now? Who comes to mind that's 50 or 60 plus that might be sitting with some idle assets? And if you have someone that comes to mind, I would get a hold of Jason at URL. You can come to us as well, but URL is really we're part of the URL organization, so I'd say go through URL. Let us run a quote for you, and it'll reinforce how this works. We can explain specifics to you of how this works. So keep making notes of those clients. So again, looking at the goals for the, the client: retain access, chronic illness liquidity, limit taxes, maximize benefits for the beneficiaries. So now the fun part. Let me describe for you what you do and don't have to do here. Now, some of you that have been in the business for a while, you take doing a life insurance application as part of the business. You know what? I don't like taking 20 or 30 pages out in my portfolio, but it's what I do. What we have here with Legacy Optimizer is we have a simplified process for you to submit the case and have the underwriting done. So we're able to do totally paperless. You can use your tablet, your iPad. We have a facility called Simple Submit where you can literally go into the tablet or your computer. You can enter the client's information. You can enter the specifics for your illustration. And when you transmit that, that will take you to the point where we will begin to have a phone call. When you transmit that information, that's what triggers the authorization for the phone call. We don't do a full exam. We don't do fluids. We're going to underwrite this solely with an MIB check, a prescription check, and a phone interview. So after a 15 to 20-minute phone call, you're going to be told if you're either accepted or declined. It's going to be standard rates up to a table 4. So if you go through, in most cases, you're either going to be accepted, hopefully, you're going to be declined if there's a declinable situation, or in rare cases, there could be a referral to an underwriter. The example that we might have there would be if there was disagreement between what the client stated in the interview versus what we saw in the MIB or prescription check, and the underwriter referral is where we would give them an opportunity to straighten up or resolve the communication if there's any differences. All right. So I think what I'd like to do there is I'm going to pause and I'm going to switch over and I'm going to show you where we can actually have digital sales tools and where you can get more information. All right. Can you guys see the screen that says Legacy Optimizer now?
Yes.
Yes, I can.
Okay. All right. Thanks, guys. Okay. The next part of this, and probably, kind of starting to bring us home here, is if you go into your web browser, if you go into the web browser on your iPhone, your Android phone, your tablet, your iPad, your desktop computer, if you type in just the letters NA, like North American, NA Legacy, NALEGACY.com, it will bring this page up. This is the single source you need for the materials and for the story for Legacy Optimizer. So let me just walk you through a little bit here. It's going to start with the content. It's going to start with a high-level summary. Then it's going to walk you through some of the content. So I guess there's the 2 or 3 things you want to know. If you refer to this, it's going to give you information on the sales aspect of it, the conversation, the client profile. I'll show you that quickly. There's the quote engine that it shows there. Then if you get a client to the point where they're interested and they want to move forward, this app will walk you through the submission process. There's a field underwriting guide. It'll tell you everything to expect. So now if we just say, let's look at the conversation. Now I won't play this for you, but it's a really cute video. It's 1 minute and 17 seconds. It's client approved, and it's a way to help tell the story of Legacy Optimizer. So at a minimum, for you, the producer, you might want to look at this and review it. It'll help you with how you want to present this. You can also, if you're sitting in front of somebody, you can just play this because it's kind of fun and it tells the story of what we've been talking about for about a half hour. Then if I go to the quote engine, this is something you can use in conjunction with getting an illustration. We can provide you a full sales illustration. It has all the details, all the notes, all the descriptions, all the footnotes. But for now, if you just want to know, I've got a client that's so many years old, say they're 68 years old, they've got $50,000. What's that going to do for me? What you can do on this digital sales tool right from your tablet or your phone, if I open the quote engine, I'm going to just put in, let's say 68. I'm sorry, I did it wrong. So let's say 50,000 premium, age 68. Let's say male, non-tobacco. I'll leave the tax bracket at 25%, and I'll say our alternative is a taxable option at 1%. What the quote engine is going to do for you is it's going to show you your guaranteed death benefit is $78,000. So your 68-year-old male, 50,000 CD is immediately guaranteed leveraged death benefit for the kids of $78,000. Another way to look at it is, how long would that CD have to be in the bank before it grew to $78,000 at the rate of return you're getting? So that's another way to approach it with clients too. If you scroll down, you see here on the chronic illness liquidity, you see the dollars that could be taken out for the client either on the guaranteed basis, actually on guaranteed basis 65 to 79, and as Kim mentioned, there's two different thresholds there. You see the number of dollars that could come out, and they show also if you leave the money in and on the non-taxable investment, it shows how much the money would grow to as well at age 85. So it's a pretty handy little tool, but we'll want to then run the quotes for you as well. So if we go over just to next steps, the next steps will walk you through how it works. And I'm not going to go through all these things for you here. I just want to show you what's there. If you're interested, you could look at these things, and if you have questions, you can give us a call. But primary questions. Here's the kind of the knockout questions, or how to pre-screen or do some field underwriting. We're not looking to do guarantee issue, but it really is not extremely difficult to qualify. And you see some of the things, have in the past 2 years, have you been declined for insurance? So you don't want to be saying yes to these. In the past 3 years, have you been convicted of a DUI? Are you currently in the hospital or long-term care facility? So you can see here, you need someone to be insurable, but they don't have to be that squeaky clean best class or, super preferred best class. Then it walks you through completing the application. And I won't take you through all these steps here, but you can see there's a place on the screen where it'll take you to the facility or the simple submit to launch the input for the application. It'll then take you through the phone interview, and it'll walk you through the steps. On the phone interview, you can do it in a couple of ways. If you're sitting with the client, you can dial the phone. The advisor or agent has to initiate the call with their credentials. You could then, if you want, you could hand the phone to do the interview to your client, or if you're not in the same location, you can do a three-way or conference call where the agent can get on the phone, initiate the call, have the client on, and then they can let the client and the examiner do the 15 to 20-minute phone interview. Okay. Then I guess here, I'm going to try to just pick some of the more important pieces. There is the field underwriting guide, quick reference. This is on there. You can download the piece. This is going to be product specs, and it's also going to be just a scroll through here. It's a list of different conditions. You may want to just have this in your bag. You can see muscular, nervous disorders, psychological disorders. So, it's something you can have in your bag if you want that with you. Under just a couple of other things on agent resources, this is probably one of the places where you'll refer to, because under agent resources, you see the product details, sales process, application process, tools and resources. These are all the things that you have at your fingertips to start with familiarizing yourself with the product and working yourself through. So I would probably pause there and just, I guess take a breath. Simple product, addresses the client needs, addresses the client legacy needs, gives them significant control and access during their life. And for those of you that might be comfortable with the application and underwriting process, we've got a way that if you didn't have to do it, would that be helpful? And for those of you that may sell an occasional life policy, but it's not your core business, this could be, also a very significant way to help add this to your practice. So, that's a little bit on the process as well. But Kim, let me pause again, and I'm sure there's some things you could add there, or some things I might not have hit thoroughly.
Sure. I just want to confirm all the benefits of this product. It's got guaranteed death benefit, like Steve has said. Not only that, we've got living benefits for chronic and terminal illness. You've got a return of premium in years 5 and on. You've got a guaranteed premium bonus of 2% in years 5 through 9. So just a wonderful product with a simplified process. That client, again, is in need of death benefit protection, a baby boomer, age 50 to 80, having 25 to 200,000 in underperforming assets, and want to pass on a legacy to their heirs, but still, like Steve mentioned, still have control if they need it.
Great, thank you. So I would encourage you, if you have any clients or prospects that come to mind, 50 plus, that might have some idle assets, give us a call, give Jason and the crew at URL a call. From a business development standpoint, it might be a great time to sit down with someone if you're having coffee or having breakfast and just ask them a few basic questions. Do you have any legacy assets you're leaving for the kids? You might be able to ask them, hey, how are you doing with your long-term care plan? Are you satisfied and comfortable that you've taken care of that need? Now, in both of those cases, this is what you guys do. See what they say. Another question that's kind of fun is to say, do you have the old life insurance or the new life insurance? And obviously, they're probably going to look at you and say, what are you talking about? And you can either discuss living benefits versus no living benefits, simplified process. And we just kind of like this. This is a way for you to expand the conversation or start some new ones. So we're here if we can help. We're thrilled, Jason, to be on your team. Folks, being affiliated with URL is probably one of the best choices you can make. We work with several organizations across the country, and we can tell you that there is nobody better than URL, and you are in a great place. So, Jason, thanks for having us on.
Yeah, thanks, Steve. I appreciate it, Kim and Steve. You guys did a great job. I want to thank everybody for joining our presentation today. I will be reaching out to you this afternoon just to see if you guys and gals have the 3 to 5 names that Steve was referring to. I'd be more than happy to run some sample illustrations or see what kind of numbers that they produce. Please give us a call at URL for all of your single premium and annuity needs. Like we said, we'd be happy to provide you with any sort of brochures, illustrations, or simply answers to your questions. So our toll-free number here is 1-800-926-8875. Again, my name is Jason Collins. I'm at extension 156. You can also ask for Joe Corio, who is our Senior Vice President here at URL. He's at extension 111, and Maria Adams is at extension 102. I want to thank everybody, and have a wonderful rest of your afternoon.